Welcome to the Blue-Eyed Girl, where we look at financial insights. Have you ever heard of Buy Now and Pay Later, also known as BNLPs? What are they, and are they a bad idea? Buy Now and Pay Later, also known as BNLPs, are programs for people to get an item now and pay for it over time outside of a credit card. These used to be used for large purchases, mattresses, bed sets, or furniture like couches and dining room sets. However, the world and economy are changing. If you go to a Skechers store, you'll see they now accept Buy Now, Pay Later for a pair of shoes. No longer used for large purchase items, if you make a purchase that is for $100, even on Amazon, you're offered an option to pay off that purchase, which may not be that large, over time with a Buy Now, Pay Later company. Some credit card companies even offer an option of paying off a single purchase item that is more expensive, $200 or so, over time. Buy now and pay later, or pay over time. So what's the deal? If you pay over time, you'll pay more interest. If there's even a small push to tempt you with paying less over time, why wouldn't you take it? Why not pay $40 a month instead of paying the full $300 now for that item? The companies pocket that profit. They're trying to maximize their profit over every dollar that they can. If they can make more money from you from a $100 purchase that you now decide to pay later, they will. It's up to the consumer, you, to be informed and not let that happen. Don't give your money away. It's yours. But we also have seen a shift in the economy. Buy Now, Pay Later used to be for large purchase items. Now it's for shoes and more simple items. So why? People are less able to afford the basics. Shoes are expensive. Some are even cheaply made and may not last as long as they used to. The more items people put on these Buy Now, Pay Later services, the less likely they are to pay for the items. After the immediate gratification of taking home the item that you bought, why are you paying out every month for 8 months for something you already have? People just don't see why they're paying all this money that they don't have on what? They have the thing. Buy Now, Pay Later doesn't work like the old school layaway, where you used to put items that you wanted on a layaway payment plan and the store kept your stuff until you pay them off. If you didn't pay for the items, the store put them back on the shelves and sold them to someone who would. Buy Now, Pay Later companies like Klarna, Afterpay, and Affirm, and many more, are having to try and collect money from non-paying customers. There are so many non-paying customers that by 2020, 42% of Americans had made a purchase through one Buy Now, Pay Later company or another. Over a third of those customers missed at least one payment. And in Q2, or the second quarter of the following year, the default rate doubled. So let's take a closer look at Buy Now, Pay Later programs. Until recently, the regulations around these programs have not been as intense as it is with credit cards. You don't need a credit application to be approved for these. And traditionally, the payments made to these companies were not reported to credit reporting agencies, therefore not having a negative or even a positive effect for consumers. But the landscape's changing. Buy Now, Pay Later programs are now being reported to credit bureaus. Also, some countries, like Sweden, are no longer allowing Buy Now, Pay Later programs to be offered as a customer's first choice at checkout. In the United States, the Consumer Financial Protection Bureau, CFPB, has published a new report analyzing the financial profiles of Buy Now, Pay Later borrowers. So looking specifically at the borrowers, the people that use the product. While many Buy Now, Pay Later borrowers use the product without noticeable indications of financial stress, the report finds that Buy Now, Pay Later borrowers are more likely to be active users of other types of credit products, like credit cards, personal loans, and student loans. They're also more likely to exhibit measures of financial distress than non-users. For example, Buy Now, Pay Later borrowers are more likely to be highly indebted or have revolving balances or delinquencies on their credit cards compared to consumers that do not use Buy Now, Pay Later products. So these would be users of a lot of different types of debt, and typically people who do not manage their resources well or don't have sufficient resources, so they are using debt. The study continues saying Buy Now, Pay Later borrowers are also more likely to use high-interest financial services, such as payday loans, pawn loans, bank account overdrafts, etc. The report follows previous CFPB research on the Buy Now, Pay Later market. A common misconception of Buy Now, Pay Later borrowers is that they lack access to other forms of credit. Our analysis shows that these borrowers are more likely to use other forms of financial products, says CFPB Director Rohit Chopra. Since Buy Now, Pay Later is like other forms of credit, we're working on ensuring that borrowers have similar protections and that companies play by similar rules. So this leads me to my summation in stating that these products are not really in the consumer's best interest. They negate the financial responsibility of paying off your item in full at the time of purchase and could potentially get you into a situation that is harder to get out of, like ever-growing consumer credit card debt. Buy now, pay later programs are in their infancy. They're not well regulated and, in the long run, don't really benefit consumers. Use with caution. If you like this type of content, please consider liking and subscribing and checking out some of my other videos.